Hello and welcome to this week's episode of the Stock Market Update, uh, brought to you by Conservative ETF Investor. I am your host. My name is Ken. Today's date is September 18th, 2017. This is the homepage for Conservative ETF Investor. And on the homepage, once this video is done, I'll click the link right here. I'll put the video, post a link right here so you can click right on it. If you scroll down, you'll see our current recommendations. And our current recommendations are all on hold. We have a 5-position portfolio with the 1 position of 10% of cash at this time. And here are our symbols. And our percentage allocations are actually right here, right on the portfolio. So 40% in SPY, 10% in VEU, 15% VNQ, and 25% in OSTIX, which is like a bond fund, or it's an income fund in this case. Okay, so that is where our current recommendations are. If you're new to Conservative ETF Investor, you can find out more about the portfolio under Portfolio Ideas. Here's more information about the portfolio. Here's our current recommendations, the same thing, but in a different tab. And on the home page, if you scroll down, you'll see the current recommendations, as well as if you want to drop me an email and a contact us format right there and send. Okay, so there is the website. This is how well the portfolio has done. Since our buy recommendations, the portfolio is up 11.312%, not including dividends. The total of our dividends is 1.88% thus far. So you would add 1.88 to that number to get the total return number. Now, just for calendar year 2017, the portfolio was up 7.25%. So that's how well the portfolio has fared. Now we are going to jump into the charts. Okay, so let's do our first chart is going to be the S&P 500. We use the charting service called stockcharts.com. And for our purposes here, we use weekly charts, candlesticks. Each one of these bars represents 1 week of action. We do a 5-year time horizon. You can see that the S&P 500, symbol SPY, has been trading in an upward wedge pattern for some time now, since calendar year 2016. And currently we've touched off the lows, bounced off of them, and have come up off the lows. We use 2 momentum indicators. One momentum indicator here is the MACD, which is the moving average convergence divergence at default settings. The next one down here is the slow stochastics at default settings. Now this here is the thumbnail. You can see that the MACD has bottomed, is coming up, and getting ready to cross above its signal line. That is a bullish action. The slow stochastics is above its signal line and above 80. These are both bullish actions. So it appears as if from the momentum indicators and from the chart that this ETF, the S&P 500, should rise to at least the top of this trend channel up here. It looks like it's in the 260, 265 range. From what we're seeing right now, that's what the charts are telling us. Okay, the next one that we want to look at, the next chart, is VEU. This is the Vanguard All World excluding the United States ETF. Okay, it's traded on the New York Stock Exchange. Oh, I forgot to mention how well of a week the S&P 500 had. Let's go back to the weekly. My bad. The S&P 500 gained 0.32% for the week. Okay, now let's look at VEU, weekly chart. For the week here, we've gained 0.47%. Okay, now let's come over here and look at the thumbnail. Now, this chart pattern is slightly more complex than the chart pattern of SPY. Now, we were trading in an upward wedge pattern. The ETF was extremely bullish and it broke through right here, somewhere around April. And then we had a top's resistance line that it also broke through at the same time. Both of these lines are now support lines. You can see that on this upward trend line right here, how it was bouncing on that, acting as support, and then jumped right up. Since then, it has now traded inside of these two channels right here, which is an upward rising trend channel at a fairly steep angle, which is somewhat non-sustainable. So there will be a correction like this at some point in the future, unknown time frame when. Looking at our momentum indicators, you can see that the MACD has bottomed. It's kind of been snaking in and out, so it's traveling a little bit there. But during that time frame, the ETF has been traveling up. The MACD is currently above its signal line, so it's in bullish territory. For the 5 years, it is fairly high at 1.5, so that is a little bit disconcerting. The slow stochastics is above its signal line and it's above 80, but it looks like the trajectory has lost momentum and getting ready to come back and through its signal line. Considering that we're trading in this upward trend channel and we're close to the upper end, it would I would get the impression that we're going to start to either move sideways or come back down towards this support line of the trend channel. So that's my interpretation of VEU. Let's move on to our next chart, which is VNQ. VNQ is the Vanguard Real Estate Investment Trust ETF traded on the New York Stock Exchange, had a positive week, 0.05%, so it was a flat week. Now, for VEU, we had this rising resistance line, and we've since broken through that one and kind of moving sideways. So it was trading in between these two trend channels for quite some time, this one and this one. Then this week here, not the current week, but the previous week, it broke up above this resistance line, but then it closed right on the resistance line. And now this week, it is the same thing. It's right on this resistance line. If we can get above this resistance line and close above it on a weekly close, that would be a bullish action to come up to this next resistance line here. Let me just fix that line because it is slightly off. I just want to make a small adjustment to this one here. It looks like it's closer to right about there. As long as I'm here, I might as well just extend these out too. Okay. Now, if we indeed do break above that and come above this and come up to here, that would be a gain. Let me try to get this as close as I can, of approximately 3.5%. So we would experience a nice 3.5% gain from here to here if indeed we can get above that, close above that, and travel to this next resistance line, which is this top, which was created in 2016, a 2016 top. And you can see the correction that took place after that top was formed. We've come up and moved sideways since. So if you put kind of like a rectangle around this, if we can break out above it, that's positive for it to go above there. Let's look at our momentum indicators to see what they're telling us. The MACD is above its signal line and traveling north, which is positive. If we can get, if we were to put in a trend line above here and this was to break out above it, that would also give us some confirmation. Let's go ahead and add that trend line right now. So if we were to take this, put in a line, touching these here, So I'm touching these tops here, 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 and here. If we can get this above it, that is going to be a positive action. All right, let's go ahead and just close that down. And for the other momentum indicator, which is the slow stochastics, we are above 80, above the signal line, but you can see that the momentum has been lost and it is beginning to travel back into the signal line. And the ETF is showing that it's lost momentum as well because it's kind of traveling flat now. And you can see what happens when it hits this mark. In the past, it comes crashing down over about 3-week period, about a 3 to 4 week period, 3-week period, 3-week period before it finds some support and then continues on. So, but you can see that the bottoms have been rising. We have definitely been in a rising bottom situation, but the tops have been pretty close to, well, right where they're trading at now, 85.32. So we'll see how this fares in this week moving forward. So we need to see more action. Let me just see how it's doing right now. 85.31. Okay. Now you see how it's down 0.04% for the week. That's the current week. I'm actually doing this on a Monday. I didn't have a chance to get to this webinar for the stock market update over the weekend, which is the way I like to do it. So we're actually seeing the current week's action. So that's actually not a true representation of how well the stock market did for the past week. Actually, for the past week, it looks like it had a positive week because it closed here from the previous week to last week close was right there. So it looks like it had a small gain. Okay, now that is for VNQ. Now let's go to OSTIX. This is a mutual fund, so this is, well, let's see, I'm looking at a daily here. Let's go to the weekly. And this won't show this week's activity till the end of today, so it's truly representing last week's now. You can see it by the date, September 18th. If you look at the date of the other one, VNQ on a weekly, you'll see that it shows, where's the date? Monday the 18th. And the other one, OTSIX weekly, is showing a different date, Friday, September 15th. Okay. And so it had a positive week, 0.15% for the week. But the important thing is that we got one of these dividends. And when you come over to the portfolio and you go to OSTIX, you can see that we had a dividend on 9/15/17 of 0.1275 cents per share, which equals a 1.13% dividend that just got released. So even though our on this particular deal our buy was terrible at $11.44 and the price came down to $11.33, even though that happened and we had a loss of 0.96%, because we got a dividend of 1.13%, this position is up 0.16%. So as soon as we get above 11.44, you'll get the dividend plus you'll get the 0.96% back. So that'll be positive for this. That's the beautiful thing about having dividends in your portfolio. This particular mutual fund pays 4.84% on a annual yield, so it's fantastic yield, and you can see how well and how strong this has done since just in January, February, March, somewhere in March right there, and it's just done fantastic. So this is a very, very strong position. Okay, so that is it for OSTIX. Now we have two volatility indicators. The VIX we want to look at. So the first one is going to be the VIX, and it is a volatility indicator, an indicator of the S&P 500 to see how well it's doing. You have two moving averages here. You got the blue is the 50-day and the red is the 200-day EMA. The 50 is below the 200 and the volatility indicator is trading below both. That's telling you low volatility. That's telling you that that is poised for stocks to go up. When the volatility is low, stocks, here you have a chart of the SPY, S&P 500. As this comes down, the S&P 500 goes up. And when, let's see here, when this is coming up like it did from here to here, you can see that you lose, the S&P 500 goes down generally during that time frame. So this is a MACD right here. So the S&P 500 from the VIX standpoint is looking good, and we like to just look at one other one. This is the volatility indicator for the NASDAQ 100 called the VXN, and it's the same principle. Now the 50 is above the 200, but you can see that it is coming down sharply and getting ready to cross into that, and the indicator is way down here, way below both. So it is going. So as long as this stays low, this is going to come back down, being more bullish for the NASDAQ 100. The MACD is below zero, below its signal line. All bullish actions for the ETF here is QQQ, which is a NASDAQ 100, and you can see here that this has been coming up while the MACD has been coming down because they work inverse to one another. That's about it. It's looking bullish. The stock market is absolutely looking bullish. So that is going to wrap it up for today. Brought to you by Conservative ETF Investor, and I hope you've enjoyed this. I am your host. My name is Ken. Thank you.